Hey, Tyler, thanks very much. Yeah, with maybe the energy power player. I mean, Kramer will tell you, probably the most listened to guy in the oil patch. And so, great way to wrap things up today. Scott Sheffield of Pioneer Natural Resources. Scott, it's great to have you on. Pippa Stevens was going through the numbers here. We lost 9% on oil the first 2 trading days of the year before today. I could probably make 10 bullish cases for oil and maybe 1 or 2 bear cases. The bears seem to be winning. What is up with oil at 74, 75 bucks? It doesn't make a lot of sense.
Brian, it's always great to see you. It's been a while, and I firmly believe y'all bring on people like Mamrita and Jeff Curry. I'm firmly in their camps. China's coming back strong, 2023. Once we see demand pick up a couple million barrels a day, by the end of 23, there is no supply left. U.S. shale model has changed. ABS and Saudi Arabia has mentioned they have very little supply left, along with UAE. This is the first cycle in 45 years. I see very little supply left in the world, and once demand picks up a couple million barrels a day, things are going to get very, very tight.
Why are we at 75 now?
It's a combination of what happened in China with zero COVID policy, SPR. We're down to a 40-year low on our inventories in the U.S. with all the releases by the Biden administration. And then we got the recession discussion. So it's a combination of all three weighing on oil prices. It really should not be there.
There's this whenever somebody says that's an easy thought, I think to myself, uh-oh, maybe we shouldn't be thinking it. That when we have to refill the 234 or whatever million barrels to the SPR, it's natural demand, there you go. But others say, no, because of shale, we don't need the SPR like we used to, and there's no rush to refill.
Yeah, the only issue is shale is down in its growth rate. It's only growing in 22, about 500,000 barrels of oil per day. I'm predicting it'll slow down to about 300,000 barrels of oil per day over the next 2 or 3 years. And eventually, and the Permian's the only place to grow. The Permian is going to be slowing from 8 million barrels a day that we've been giving out by 2030 to about 7. And so it's really the slowing down of the oil shale for all the various reasons we've discussed over the last several years.
So this morning, you were the keynote speaker this morning here at the event. You lowered that. It's not yours. It's all the players. Permian forecast from 8 million barrels a day down to 7. Why? I thought the Permian was growing.
It's growing still. It's the only oil shale growth in the U.S. It's a combination of inflation. We're seeing significant inflation in 22 and 23 for the producers. It's a combination of consolidation. As the publics acquire the private companies, we're slowing the rig counts down. It's a combination also of productivity. So we're going to what we're developing all zones at the same time. So we're producing less oil per rig. So it's a combination of all those factors that's lowering the decline rate to 2030 to 7.
I know Kelly's got a question. Kelly, get in here.
Sure, Scott and Brian, thank you. We had a guest last hour. I asked him if he would buy energy stocks here, and he said the reason he wouldn't is because he no longer knows what the sort of right or normal price for a barrel of oil should be. How would you answer that question?
I showed we'd have to put it out on our IR presentation, but we showed the predictive capability of the oil futures curve over the last 30 years. And everybody has been wrong. And we've gone through about 6 cycles over the last 30 years. We're moving into a new cycle. My best argument is that there's no extra supply for the next 5 to 7 years. Demand's going to come back. I cannot change the volatility of oil. Oil is always going to be volatile. But we do know that supply-demand is going to be very, very tight over the next several years.
So to finish it up, and I want to quote the late, great Boone Pickens, who whenever I'd interview Boone, he would never give you a price forecast, but he'd say 100 before 60. You know, he'd kind of give you that range. Would you agree 100 is more likely than 60 again?
Yes, I'm a firm believer over the next 7 years, 100, 150 is more likely than 60. I think 70,
150?
75, 150. That's where I think we'll have demand destruction, around $150 a barrel.